Now, in certain cases, what used to happen was that Section 54 and Section 54F basically provided exemption in respect of capital gains, which might arise on transfer of a residential house in case of Section 54, and a long-term capital asset other than a residential house in case of Section 54F, provided the capital gain was invested in a residential house or the net consideration was invested into a residential house under Section 54F and Section 54. However, the government noticed that while the intention of these provisions was to ensure that everyone gets a housing, what is being used in this case is that HNIs and people with very, very high net worth were actually getting huge amount of capital gain, and they were reinvesting the proceeds into a residential house and claiming capital gains exemption from them. In order to curb this practice, these sections are now proposed to be amended where a maximum cap of 10 crores is being provided for the purpose of capital gain exemption under Section 54 and Section 54F. So any capital gains in excess of this amount will not be eligible for exemption under either of these two sections, and will therefore the person who's selling will have to pay capital gains tax. Thank you for watching this video. In case you are interested in any of the international tax or UAE corporate tax courses, you can download our app or go to the above URL courses.sortingtax.com to evaluate some of the tax courses that we have to offer.